Hey guys, David here from Investor Prime TV. Alibaba has had their Q4 2021 earnings reported on the 24th of February. But what does this actually mean for the price going forward? If you're new to this channel, make sure you guys subscribe and of course hit that notification bell so you don't miss any further uploads. With that being said, let's get this bread. So Alibaba reported their earnings on the 24th of February. The estimated earnings was $2.51 per share, whereas the reported $2.66. So this was really good. Whereas on the revenue side, the estimated was sitting at 38.763 billion, but the reported 38.177 billion. They just missed their estimate slightly by 583 or 585. So this is not necessarily a bad thing. However, it's seen as this is their actually, in terms of growth, that the business is actually growing quite slowly. So revenue for the company, whose main business is e-commerce, rose 9.7% to $38.1 billion, but that was well below its historical growth rate, which has averaged around 40% since it went public in 2014. Revenue in the quarter was also short of estimates at $38.9 billion. Alibaba's customer base continued to grow as well, with the company adding 43 million customers in the quarter to reach a total of 1.28 billion. Its China commerce segment, which makes up the majority of the revenue, grew just 7% to $27 billion. Management cited slowing market conditions and competition as the main reasons for the weak growth. So guys, despite the revenue not being as good as historically it's been, and this shows that the company has been growing at a very slow rate, or a much slower rate than it already has, the company has actually added like 43 million new customers. I mean, that's a lot of new customers, a lot of money, new money going into the business that could basically be used into the business to help grow it, or to basically get more resources, or whatever the company needs and the business needs to effectively grow and expand its operations. And also, even though the revenue has been growing at a slower rate, nevertheless there's still growth there, which is a good and positive sign. And also the earnings, they beat their earnings, which shows that with this 43 million new customers, they're earning a lot more. So as a business, there's still a lot of positive outlooks towards Alibaba right now. A lot of analysts that are saying that this is a buy. In fact, there's a lot of analysts saying that it's a strong buy at the moment. So the overall consensus is that it's still a buy. If you're looking to invest in Alibaba, this would be a good time to invest. So for the past year and a bit, the price of Alibaba has really tanked. I mean, it's tanked from roughly around $250 all the way down to where it's currently sitting at $104 per share. Now, this is a scary sight for a lot of people, especially if you're long on Alibaba. You know, it's a beautiful sight if you're short on Alibaba, and for a lot of good reason, a lot of people may think that, you know what, Alibaba is heading to zero, or the company is not doing a lot of good, or they're not performing, or whatever the case is. But to me, it looks like the price is bound to recover. And to explain that, we'll have a look at the RSI. So the RSI is a momentum indicator. So basically showing which side the momentum is on, whether the bullish side or the buyer side, or the seller side, the bearish side. So right now the RSI is heading towards oversold, which shows that there's going to be some demand picking up, basically getting into this market. And on the long term, basically the next 6 months to a year, I can see this price possibly recovering. We're going to start seeing some green candles. And also looking closely, the price is heading towards a support of around $87. I mean, it seems like a long way to go, and a long way that it has gone, basically from $250 all the way to now. But I believe when the price gets to roughly around $87, then it will find some kind of demand base, and the demand will start picking up, which could potentially see the price heading to test the support and bouncing off the support and heading back up. We can only sit and wait to see what the market is doing, the reaction from the market, especially seeing as the earnings, with earnings being good but the revenue not being as good as estimated. You know, we'll just wait to see how people basically react to that news. So despite mixed feelings about the earnings report, and also the fact that the price has just been crashing, I believe Alibaba is going to make a good recovery and actually start doing really well in terms of price, because as a company, they're still making very good revenue and earnings as well. So that mixed with, on the fundamental side, mixed with investors starting to get on board and buying up Alibaba, especially seeing as the price has dipped, and technically the price is on sale right now. it could be seen as undervalued. So I believe a lot of people will catch on, Wall Street will catch on, and the price of this will start rising. So if you enjoyed this video, make sure you guys subscribe and of course hit that notification bell. Give this video a thumbs up so I know this is the kind of content that you guys like to see. Now continue bringing out more content like this. And also comment your thoughts below. What do you think of the earnings report? What do you think is going to happen going forward with Alibaba, or just in general about the marketplace or the whole crisis that's going on? Let me know your thoughts in the comments below. Thanks guys, I'll see you in the next video.